Hello and welcome to Policybazaar. I'm Arjun Bhagat. Now, do you have an insurance policy that you think is not needed anymore? Or do you have a policy that your agent convinced you to buy and now you feel it is not suited to your needs? We often find investors hurriedly taking an insurance policy at the end of the financial year. While they may save some tax in the process, it may not be the right policy. But does that mean that you need to continue such a policy through its entire course? Almost all insurance policies have some sort of exit option that can be exercised, although they do come at a cost. To help us understand how and when to exit an insurance policy, we have with us Yashish Dhaya, CEO and founder of Policybazaar. Welcome to Policybazaar. Yashish, now tell us, if I have a policy, I've taken it in a hurry, or for whatever reason I don't feel it's giving me that optimum return, or it's not the right policy for me, how do I get out of it? How do I exit?
So there are three mechanisms. First of all, I strongly urge you to please read your policies in detail before taking them and understanding them, at least the illustrations.
And that's something that you have been stressing for a long time.
I have been stressing, but the problem I have is the pull market in this industry, in this country, is so small, and everything is a push market, which is okay. But in the push market, a lot of times the people are not understanding what they are buying, and they're buying it only for tax reasons, etc. Now, the second part is you have a 15-day to 30-day, depending on the kind of policy, what you call free lookup period. In this time period, the least you can do is at least look at your illustration and see whatever you have been promised. Have you received that? And that is a point in the free lookup when you can cancel your policy should it not meet with your requirements or should it not meet with your understanding. You have that option. The third option and the worst option is to try and cancel a policy during its lock-in period.
Now, there have been some changes as far as the lock-in period is concerned, hasn't it? Can you just elaborate on that? And then, does it make sense getting out at that stage?
So, 2 years ago, there was a change in the ULIPs. The ULIP lock-in period moved from 3 years to 5 years. So, the lock-in period was extended. Now, there has been a change in the traditional plans. The lock-in period was 3 years, usually. So, for the first 3 years, you would not get anything. The lock-in period for plans which are less than 10 years in duration has been reduced to 2 years. For the rest, it still stays 3 years. There have obviously been changes in the surrender value as well. But okay, so coming to the cancellation point. One is you can cancel before the free lookup period is over, and you will get all your money back.
That's in those 15 or 30 days,
Absolutely.
Whatever you have.
Now, if you've missed the free lookup period, then you can cancel during your lock-in period, in which case you lose all the money that you had. The third thing is, once your lock-in period is over, you may also cancel the policy, in which case you will get something known as the surrender value, which is, a part of the premium that you have paid you will receive back, and that is usually very low. So it has improved a bit because of the regulations, but it has only improved a little bit. The fourth option you have is to convert your policy into a paid-up policy. So what the paid-up policy does is, suppose you had a policy with a 20 lakh rupee sum assured, and you have paid 3 premiums out of 20.
Right.
It will become approximately a 1.5, it will become, so you've paid 3 premiums out of 20, that's about 15% of the premiums paid. So it will become 15% of the 20 lakh roughly, and you will get a 3 lakh rupee sum assured.
But that's after waiting out a certain period of time, right?
That you have to wait the first 3 years. You have to wait the first, so you cannot make it a paid-up policy immediately, but you can make it a paid-up policy once your initial lock-in period is over. And if you are really not interested in the policy, that is one option. So I would say those are the 3-4 options that an individual has. But getting into a policy is the most expensive thing if you do not understand it. And it's a mistake that, honestly, you can only cover during the free lookup period. You cannot really cover it after that. It becomes very expensive to cover it after that.
So at what point would you suggest to someone that, all right, you've already paid so much of premium, stick to this policy? Because it doesn't make sense. You end up getting probably 25-30% of the surrender value back or the paid up value. It doesn't really make sense. So when would you advise a customer to say, all right, now you just continue with the policy that you've taken?
I think there are 2 periods. One is once you've paid the premium and a lock-in period is over. You've already invested what you had to invest. You're going to lose that if you don't continue with it. So it's a time when, your majority of your costs have been deducted, and from here onwards things should be a lot better. So one would advise a person to continue. At the point when the lock-in period is over, that is a point when one could when the option is between, essentially converting your policy into a paid-up policy or surrendering it. Now, the surrender amount is going to be so low that it's not worth it. Even with the changes, you will only get about 30% of what you have paid so far in surrender value. So you will lose 70%. So if you've paid 1 lakh rupee premium for 3 years, and the 3 year is a lock-in period, you have paid 3 lakh rupees. What is the point of getting 90,000 rupees back? It is much better at that stage to convert it into a paid-up policy, and at least whatever amount you have, you will receive back. Now, the regulations that have brought in certain changes, which have improved the amount of surrender money that you receive. So after 3 years, now the companies have to give you at least 30% of the money back. And as the policy continues, if you continued in the last 2 years of your policy, at least whatever amount you have invested over the last 18 years, suppose a 20-year policy, you've invested for 18 years, you will get back at least 90% of what you have invested. So from that perspective, the policies are becoming a little more consumer friendly towards at least long-term lapsation than towards short-term lapsation.
Right.
And that is a little bit of value coming to the consumers, not a huge amount, because the consumers still lose a lot through any kind of break. But remember, these are long-term policies. They are meant to benefit people who continue the policy all the way. That's why you have loyalty bonuses and various kinds of bonuses coming towards the back end of the policy. So that's how one has to look at it.
But from a macro perspective, I mean, to give an overall sense of what actually is happening in terms of people discontinuing policies or surrendering them. So what is the situation like? Because, you were talking about alarming levels where a lot of the policies people take actually end up lapsing or they don't continue. And there is a loss on both sides, whether it's the consumer or it is the insurance company.
I think there is a loss on both sides, but unfortunately, the consumer loses a little more when a policy early lapses, because the surrender charges were there. And in fact, if you take a very close study, some of the companies that have become very profitable are on the basis of very strong lapsation, because the surrender charges are there. And the surrender charges, the consumer loses, but the company gains. So it's a tough one to call. I think surrender charges coming down is a very welcome thing, because these were mostly hidden. And consumers, according to me, a surrender is mostly, unless it's out of financial difficulty, it's mostly a complaint.
Right.
That I did not really understand this product, something else was sold to me. But hey, you're a mature individual, you're investing that, you're a taxpayer, you're making that investment.
One needs to do that with
one's
eyes open there.
Yeah, like, how long can you keep saying, hey, somebody fooled me, somebody cheated me? There's a very important thing. Even when you read a newspaper, somebody doesn't come and explain all the news in it. You have to make your own deciphering, right? And you act on the basis of that. Every day we work, everything is not explained. So, beyond a point, I think it's unfortunate that we go on blaming the intermediary. The consumer also has certain responsibility to understand what they are buying. Not to just wake up 6 months later and say, oh my God, what was sold to me? A taxpayer is usually somebody who's earning enough money, which means they've got a certain IQ, they've got a, it makes a lot of sense for consumers to take on that responsibility.
So I guess the take home is that, really study the policy that you're buying. After all, it's a large investment that one is making. Whether it's at the end of the year or the beginning of the year, it should not be an impulsive reaction to buy a policy.
Absolutely.
Not even look at the fine print, not even do that comparative. And it's so easy, go on the net, you can do a comparative of the policies, how they're doing, and what the negatives and the positives are.
So an insurance policy for most people will be the second highest investment they make in their life after their house. It's usually more expensive than the car you buy, because you will usually change a car in 10 years, but here you are investing for 10 years. Let's say you're investing 50,000 or 1 lakh rupees. You're going to end up investing 12 lakh rupees or 10 lakh rupees out there. So the point is, take it seriously. Don't see it as something that you just have to do for a quick tax break. There are many ways to get that tax break. And do it for the right reasons, stay. And the industry also loses out, because with these lapsation figures,
that trust goes away.
The trust goes away from the whole piece. And I think it's the consumers and the industry owe it to themselves to start creating that trust element. And that trust element comes from good products.
Right, Yashish, well, we have to take a break, and when we come back, we're going to be taking your questions. But you can write to us at ask@policybazaar.com, or you can write your queries on Twitter at @policybazaar_in. And we'll see you shortly after this break. Keep watching.
Life stops when the ride stops. Rev it up with HP Racer 4 engine oil. It keeps your engine, gear and clutch in top shape, so you can enjoy your ride without a break. HP Racer 4, a life full of action.
Fiyama Devils with shower gel and skin conditioners. Mild and gentle. Fiyama Gel Bar with skin conditioners.
मम्मा मैं सिर्फ कार इंश्योरेंस रिन्यू कर रहा था
बिना कंपेयर किए डू यू ऑल बाय इंश्योरेंस विदाउट कंपेयरिंग Policybazaar.com पे जाओ पॉलिसी साइड बाय साइड कंपेयर करो और पैसे बचाओ Policybazaar.com
काश हर मनचाही चीज अपनी हो पाती। शुक्र है लावा 3G तो है। लावा 3G स्मार्टफोन डुअल को प्रोसेसर और एंड्रॉइड जेली बीन के साथ सिर्फ ₹4199 में। सपना नहीं सचमुच।
चेन ऑफ इवेंट्स तो देखो, एक किडनैप हुआ बच्चा मुझे मिल जाता है, एक गरीब बच्ची भीख मांगते हुए मेरे सामने पिट जाती है। ये सब चीजें मुझे ही क्यों दिखाई देती?
दिखाई सबको देता है जय, दूसरे लोग नजरें फेर लेते हैं।
Just like the morning sun, life gives us reasons to celebrate. Deedamas.
I don't log in, I don't log out. I'm always on the MTS network at breakneck speeds. For all the World Wide Web's a stage, and this is my show.
Introducing Canvas Blaze, preloaded with M-Blaze Internet, a smart-ass phone for the internet generation. Designed by Micromax, exclusively for MTS.
सिंपल सी बात है, कोई रॉकेट साइंस नहीं। देश युवा है, देश के 50% से ज्यादा लोग अंडर 30 हैं। युवा हैं, उनके जो एक्सपेक्टेशंस हैं, बिलीव्स हैं, माइंडसेट है, वो ऑब्वियसली एक युवा ही बेहतर समझ सकता है, जो लिबरल हो, जो ओपन माइंडेड हो। और वो अगेन नो रॉकेट साइंस। कांग्रेस के लीडर्स हैं, जिनके साथ यूथ रिलेट करता है। वो गाना है ना, हम हैं नए, अंदाज क्यों हो पुराना। कट्टर सोच नहीं, युवा जोश। मैं हसीबा अमीन, राहुल गांधी जी की इस युवा सोच से जुड़ी एक युवा कांग्रेस कार्यकर्ता।
हर हाथ शक्ति, हर हाथ तरक्की।
All right, welcome back to Policy Bazaar. I'm Arjun Bhagat, and with me is Yashish Daya. Yashish, before we get into the questions of our viewers, let me ask you the difference between surrender value and paid-up value. And that's, both these terms are a little confusing. So can you explain those?
If you have an ongoing insurance policy, the surrender value is the amount you would receive if you surrendered the policy today. So the surrender value in lock-in period is 0, and the surrender value as a rule of thumb is roughly about 30%, although it depends from company to company, but roughly about 30% of the amount of money you've paid immediately after lock-in period. And as you proceed through the policy towards the end of the policy, it starts becoming up to 90% of the amount of money you have paid. That's the surrender value. That's the amount you will get back if you surrender the policy today. Surrender value you get immediately. So you don't have to wait till the end of the policy. Now the paid up value of a policy is, suppose you surrendered the policy, then what is your sum? Suppose you did not surrender the policy, but you converted your policy into a paid up policy. Then suppose your policy was a 10 lakh rupee policy, will it become a 3 lakh rupee policy or will it become a 5 lakh rupee policy? So paid up value is the amount you are likely to get at the end of the policy or upon an unfortunate event happening. That is so suppose after the end of 5 years in a 10-year policy, you surrendered, you converted your paid policy into a paid up policy, most likely you will have about 50% of your policy benefit retained.
Right.
That is the paid up value. So that's the difference between the two.
Right, on that note, it's time to take viewers' questions. We've got Harish Mehta from Bhopal. He says, I need advice regarding health policy, health insurance policy. He says, I have paid for 12 continuous years. He's paid the policy of Oriental Insurance for 2 lakh rupees. He says, I'm paying around 11,000 rupees as premium. I'm 60 years old and fit. I've not taken any claim till now. Now, there is a health cover policy offered by the Bank of India with National Insurance Company called BOI Swasthya Bima, which offers family cover up to rupees 5 lakhs for 7,079 and for a 2 lakh cover premium. Do you think that's a good idea for him to switch to?
So the bank policies are group policies. They may or may not have the continuity forever for him. See, the bank policies usually tend to be cheaper for slightly older people in the society, for the senior citizens. But I don't believe that will last for forever. So my personal advice is, if you've got an individual plan, stay with the individual plan. Don't go for the group plan yet. So there are certain benefits and certain disadvantages of a group plan. For the older people, an individual plan is far more valuable. I do believe their policy seems a bit expensive. So if they are fit and they can, essentially port their policy into something else, it might be beneficial for them. Because for 2 lakh rupees a cover, paying 11,000 rupees a year, specifically when you are fit and there's no problem, seems a bit high. So they can look at certain options. They could increase their cover also. 2 lakhs is a very small amount of cover. They could look at increasing that cover to maybe 4-5 lakhs, and maybe they can get something within the similar price band.
Right, we've got Ambika, who writes from Madhya Pradesh, says that I have a handicapped brother who's 39. We need to take a policy by putting some lump sum amount that he gets regularly as a monthly income till his life. Can you suggest some safe scheme? Now, there are insurance plans available that can protect your family financially in such a case. So that's what they're asking.
There are two kinds of plans that can come in, and that depends on the financial capacity of the family in terms of how they want to invest. One plan is essentially what is called an annuity plan. So you take a large amount of money, you put it into an annuity, and immediately the individual starts receiving money. So there are immediate annuities and there are deferred annuities.
Right.
And both of these are available with LIC, and they are available with many other companies, and you can choose from a variety of options and take them. So immediate annuity and deferred annuity. The reason you would decide one or the other, an immediate annuity is if you want the individual to start getting paid now. If the individual has certain financial support from the rest of the family for the next 10 years or so, you can take a deferred annuity starting from that 10-year-on period. The other kind of plans are monthly income plans, where you invest a certain amount of money for, say, 10 years or 15 years, and then the individual starts receiving money for the next 10 or 15 years. And that totally depends upon whether there is a corpus available, which can be invested today and which can form the annuity piece. If there is no corpus available and you want to invest over a period of time, then the monthly income plan is another way. If another way is you just build up through a ULIP or something over the next 20 years a corpus, which can then become an annuity. So it totally depends upon what is the financial capacity of the family to both invest in one go and to support this individual for the next 10, 20 years. And basis that, you got to make your call.
Right, we've got a caller with us. Go ahead.
Hi. I am
and your name is?
I am Google Sen.
Right, Google, go ahead with your question for Yashish.
I am 38 years old and my wife is 34. We have a newborn baby and we were interested in getting some medical cover. My monthly income is around 30,000 rupees.
Right.
And I'm looking for a cover of about 3 to 4 lakhs.
Right. So Google is looking at
in
health
this
insurance
case,
policy.
in this case, I would advise a family floater policy. There are lots of options. They've got Max Bupa, they've got Apollo, they've got Religare Health, they've got IFCO Tokyo, they've got Star Health. There's a huge plethora of options at that age. Most of the companies are focused at that age. Reliance Health has got a very good plan. So I think they should look at those options and basis that make their decision. They must take a certificate as the child leaves the hospital for whether the child was prematurely born or not. Once they have that certificate, the child can be covered from day one. So I think this is a straightforward policy as long as everybody in the family is quite fit.
Right, Yashish, we've got Janki Garg from Ludhiana, and she says that I have a Mediclaim of national insurance since the last 10 years, and my husband has now been diagnosed with a psychiatric problem. 2.5 years ago, I got him treated, but the company has rejected the claim. What should I do? I was told by the agent that after 4 years of full coverage, it would be, the reimbursements would be given.
So it's very important to understand exclusions when you're buying a policy, because exclusions are those things for which you would not be paid.
Right.
There are temporary exclusions and permanent exclusions. Temporary exclusions are the one which after a period of time you will become eligible to get paid. Permanent exclusions are the ones where you never get paid. So usually things like psychiatric problems and AIDS are permanent exclusions. Even dental treatment is mostly a permanent exclusion. So unless a policy specifically says that those are included, those come under the permanent exclusions. So exclusions one must read when one buys a policy. And in fact, we'll also make sure that we start showing exclusions clearly on the site so that there's no confusion around these.
Right. Well, that's all the time that we have, Yashish. Thanks a lot. But you can write your queries at ask@policybazaar.com, or you can write at Twitter, on Twitter at policybazaar_in. And we'll see you next time. Goodbye.